watching Market Guru. We've been in conversation with Ravi Dharamshi, CIO at ValueQuest Investment Advisors. Ravi, now we were talking about the broader trend as far as markets are concerned. Let's talk about some of the themes. You mentioned textile is something that you've been focusing on, but the other space that you spoke to us previously also about was the pharma space. And this has been working fabulously beyond the large cap space, surprisingly so. What kind of trends do you see there?
See, largely India is 10% of the US generic market. US generic market is about 350 billion.
Okay.
We have about 10% market share. But if you look at the incremental filings, which is an indicator of the future launches, we will have closer to 25% market share in the newer products that are getting launched.
Okay.
So the trend is definitely, and one more thing I want to add is the US FDA action. A lot of people are looking at it only as a threat. But I believe it is a threat as well as an opportunity. So the problems of Sun Pharma create an opportunity elsewhere. Problems of Dr. Reddy create an opportunity elsewhere. So the approvals are fewer, and if your product is in the market, then you will benefit a lot. So the trend is Indian pharma, and within that, but it's shifting sand. So you have to do your stock picking correctly.
What about auto, Ravi? We've all been waiting for the huge move in those auto names and seeing the the resulting pickup in growth, but it's been slow and steady. Apart from select pockets, we had a lot of excitement lately in, for instance, a Maruti, a lot of buzz there. Eicher Motors reported numbers, some amount of action there as well. But on the other side, we've had two-wheelers looking a bit dicey. We've had Tata Motors with concerns in China. So what would you advise when it comes to the auto
Yeah,
pack?
so you're very right. So this is a domestic economy linked sector. So it is even more tough to figure out who the winners will be. So, but when the going gets tough, the nimble and the guys with the better product and strategy win out. And we have seen examples of those and how Eicher, because of Bullet, Royal Enfield, or Maruti, because of its market share gain, is performing well. So I would not like to paint everybody with the same brush. It's clearly a product or a strategy winning out one over the other.
Okay. The other interesting bit, just taking a cue from the auto and the rural economy bit itself, has also been the way the agri space has been buzzing in trade. I mean, initially, probably in May or so, you're worried about the way the monsoon would play out. A couple of months into the season, the worries are a little bit more tapered down, is what one can actually see looking at the way the current monsoon trends are panning out. My question to you is that a space that could possibly be something that investors should look at?
See, from a larger horizon, from a 10-year horizon, there is no way out for India but to increase its agri productivity.
Okay.
There are companies that are going to take advantage of that. However, having said that, in the last 3 out of 4 years have been bad monsoon.
Okay.
So this space is also going through tough times. But there are few players, like because of some exceptional product launches, are able to gain market share, whether it is Kaveri Seeds in the in the seeds area, or if it is Dhanuka in the agrochem area, or PI Industries in the contract research and manufacturing. Okay. So there are companies that are doing well. As an entire space, probably, hopefully, I mean, this monsoon, if it is good, then we should see some pickup.
You know, Ravi, there's been a lot of restructuring that's taking place in the corporate world. We've had companies that are severely over-leveraged and some that are just trying to battle the slowdown. And one of the things that we've seen on the M&A front in light of that is, restructuring, spin-offs, and so forth. Do you see an opportunity there? Because till now, everyone's been seeing that in a negative light. But is there actually an opportunity
that
there?
Is a very, very potent area with a very high hit rate. And I can give you some examples of how a larger parent demerging a more focused business has led to value creation. For example, I mean, Alembic demerged its pharma business and land, or for that matter, Marico Kaya got demerged from Marico. And they have been runaway winners. I mean, of course, they are the past winners. You need to look at them from this point on. But so whenever such a corporate action is happening, it definitely piques our interest, and one should take a look at it. Is there going to be a fantastic value creation or no? And we definitely look at it in a favorable light. Whether it is, I mean, whether it is bad acquisition in the past, or over-leveraged balance sheet, the strength of business sometimes overrides and overcomes these challenges. If you can identify those, they are great opportunities.
Somewhere then you also need to put a distinguish out here in terms of the way innovators and survivors really play out, right? I mean, Ravi, that's been a theme that you've always held pretty close as well in terms of how one should be distinguishing between this space and how one should go about investing in that as well. Take us through your thoughts on that.
So, I mean, I will tell you the example of PSU banks versus private banks. I mean, I think private banks are doing well, not because they did something dramatic, but they did not do something stupid.
Yeah.
So they are survivors, and I think now they have a large runway. I mean, because the 60-70% of the banks are not in the fray to take away your market share. So private banks are going to gain market share. That's an example of a survivor. Innovator are these companies, those who come up with fantastic products, whether it is an apparel brand play or whether it is an auto play or whether it is a pharma product. These companies, in relation to their size, the product that they are launching is disproportionate, and they will benefit in a big way. We are already witnessing some of that. So one has to look below the surface, and if one gets caught up in the Nifty and GDP, so you will miss out on these opportunities.
So what about some of the newer themes or the new economy or new sort of ideas that are emerging? Let's take logistics, for example. I mean, it's not that it didn't exist before, but a lot more opportunity that's emerging there for now. Even a defense, for example, or I don't know, whatever else is on your radar.
So two legs on which I think the economy will revive are, one is government capex and the second is urban consumption. I think these are either already through a tough time already, or they are in the process of reviving. Like, for example, government capex, last 3 years they curtailed the capex, and this year, now that they have the money thanks to crude fall, they are going to spend. They are going to spend on rail, road, defense.
Okay.
And these are just the three sectors. So it is the tailwind is there for the sector. Now, the second part of that is, of course, you have to figure out if there is an investable opportunity in that or no. Just because a theme is working doesn't mean the companies will create value. It's a starting point for you to go and dig deeper.
Fair. So those are a couple of the themes that are out there. But, you know, one final thought here on the market outlook. We are at 85, 8600 on the index. Let's talk December 15, or for that matter, December 16. I don't want an absolute target, but is there a certain percentage, is there a certain potential upside that you see for the market?
Yeah, I don't know. I don't know Nifty, but I can tell you that there are opportunities out there if you are willing to work hard enough, and you'll make your money. Forget about Nifty. Nifty goes, I had my portfolio going up in the fall from 9,000 to 8,000.
Okay.
Average returns, average annual returns?
In the last 5 years, we would have done 35% plus CAGR. So I think that's a brilliant return, which had 2 really bad years as well.
Okay.